Greetings, this is Reggie Middleton of BoomBustBlog, and I'm here to review the Research in Motion earnings announcement that came out yesterday. Pardon me. They haven't issued the SEC reporting, but they did come out with a press release and a conference call and some preliminary numbers. I was bearish and still am bearish on the company's prospects going into the future, simply because I feel that management has made several strategic missteps, and apparently they continue to do so. And the numbers are showing that I am on track. And the numbers are showing I'm on track. Let's go over a few notes from the earnings call and from the numbers, and also some of my prognostications using the proprietary models and analysis that I distribute from the blog, BoomBustBlog. RIMM has a strong global presence, which is a very good thing. Geographically, they are very well diversified. Unfortunately, even with that strong global presence, they are suffering from a reduction in average selling price. The second quarter net subscriber count was materially lower, both lower than our assumptions and lower than management's own forecast from the previous conference call. In fact, if you look at this chart in the outset, you can see where I've highlighted the second quarter growth rate for the last 4 or 5 quarters, and even taking into account seasonality by using just the second quarter year-over-year growth rate, you have a market drop. The devices shipped were slightly higher than our assumptions, but the story still remains the same. You have a significant degradation in the growth rate, and it's evident if you simply plot the growth rate quarter by quarter over the last 15, 20 some odd quarters. Device revenue was slightly worse than our assumptions, but the story remains the same. Again, like the other growth rates that are mapped and charted in the downloadable models that we made available to subscribers, you have a downward trend in growth. This trend is actually picking up in many areas, or certain areas. Research in Motion's average selling price has been trending down with a very, very slight reprieve, which they attribute, and apparently makes sense, to a change in product mix, most likely the addition of the Torch and the higher end Blackberries, which brought the average selling price up. Management actually states that they believe that the ASP, the average selling price, will increase in the following quarter. It's a tough sell, but even if it does increase, the marginal increase that they indicated still does not do anything to counteract the general downward trend in growth. As I said in the last slide, the forecasts and ASPs look rather dubious to us. And to be absolutely honest, if you take a look at the heavy discounting on certain channels with their flagship line, the Torch, you could see where the ASP may run into some trouble, or a higher average selling price may run into some trouble. The device is, I think it retails for $650, $649.99. And at the retail level with the subsidy from a carrier, it debuted at $199. It's now available for $99, as soon as 2 weeks after the debut. That's heavy discounting for a freshly debuted product, particularly when it's competition. The competition that I said will be eating RIMM's lunch, the Apple iPhone and the various and multitude of Android devices can't stay on the shelves at full price. They have not deducted a cent from the price. I can't think of any channel or retail distribution outlet that has discounted it, and they've been sold out. We were talking the HTC Evo, Droid X, Droid Incredible, Apple iPhone 4, Samsung Captivate, the Samsung Galaxy S series. Now, to be absolutely honest, that increasing average selling price argument apparently appears rather dubious to management as well. As you can see, they're withdrawing guidance after the next quarter. It is never a good sign when management decides to issue less guidance rather than more. at the very best, from beneficial, giving them the benefit of the doubt, they see cloudiness and murkiness in the future. I think a more realistic perspective is they realize significant margin compression is going to be coming down the pike very quickly, as well as revenue growth pressures, which is what we've been forecasting. The BlackBerry Torch, RIMM's flagship product, is playing catch-up, basically, from a feature perspective. Upon its debut, it was actually obsolete by a multitude of its competition, primarily the high-end Android phones and the Apple iPhone. This is in terms of hardware specifications, in terms of OS capability in general. The OS 6 definitely does have some worthwhile features, and the ability to do many things that not only consumers but now more business users are looking to do, such as multimedia, file sharing. One interesting thing in listening on a conference call, the biggest threat to Research in Motion's hedge money in both the enterprise and its position, which was significant in the consumer market, is the Apple iPhone, and again, the plethora of Android phones coming down the pike, from the low end to the very, very high end, such as the Evo and the Droid X. Despite that obvious threat, management has not mentioned neither Apple, Google, nor Android once. Where's the beef? I just don't understand. It appears as if they're not addressing the problem. Their share price, their market share, and apparently their revenue growth are asking the same question. Now, they address the issues with the foreign governments and security, and they went in a decent amount of detail. And to be absolutely fair to RIMM management, any provider that's going to offer end-to-end security is probably going to come into similar friction and have similar problems. And I'm not saying that's not a problem for RIMM. It definitely is an issue, but it's not nearly as big an issue as the Apple and the Android threat. But despite that, and maybe I overlooked it in reading through the transcript, and maybe I didn't hear it in listening to the transcript. I'm getting old, no spring chicken anymore. But I don't recall any reference to their direct competition. Indirect references, but they need to placate the concern of the serious fundamental investor, and they need to show that they have a strategy in place. If there's a car coming down the pike and you're about to get hit, turning your head looking the other way doesn't prevent the crash from happening. You really need to do something about it. Just, a little unsolicited advice from Reggie Middleton and BoomBustBlog to the Research in Motion manager.